Hey guys, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. Guys, thank you so much for watching my videos, watching my channel. I have over 7,000 subscribers right now. Let me make myself smaller. Look at that, 7,000 subscribers. It humbles me that you guys watch my video, especially when I know my videos are always late. I'm probably the last one to talk about anything. It's hard for me to make videos throughout the day. I have a full-time job, have two little kids, have to wait for them to go to sleep, go to bed before I'm able to crank out some videos. So I do appreciate you guys watching my video, watching my content, especially since I'm typically late to the game on all the news and everything. So thank you guys so much. So today we're gonna probably be the last one to talk about Q3 Tesla earnings. But I wanted to give you my opinion. I'll go over some of the highlights and I'll give you my opinion on what these numbers mean and how strong the company is moving into the future. So let's get started. So Q3, I already highlighted some things I really wanted to talk about. First of all, the biggest thing is cash. They have tons of cash right now. If anybody thinks that they're going to go out of business, they're going to go bankrupt, that it's just not going to be possible anymore. They have plenty of cash on hand. Also, they are cash flow positive. Keep in mind, a company does not go out of business because they're not profitable. They could be unprofitable and continue to do tons and tons of business. A company goes out of business when they run out of cash. So that is not the story of Tesla anymore. They have plenty of cash. They just had a $5.9 billion capital raise. I think it was like a month ago or 2 months ago. So they have $14.5 billion on their balance sheet right now, and they are now cash flow positive. Free cash flow, $1.4 billion in Q3. Net profit, they are a profitable company now, so that's the fifth quarter in a row that they're profitable. So they're literally just like banging on the door of S&P 500. It's only a matter of time before S&P 500 has to let them in. It's just ridiculous if they do not let them in. So $331 million GAAP net profit, 874 million non-GAAP. So operation milestones. First step of full FSD beta rolled out in October. So their full FSD, the beta was just rolled out. Probably by the end of the next year, they're going to roll out to a lot more customers. And they also bumped up the price of this full FSD. I think it's starting on Monday. If not, it's already started. It's $10,000 for full FSD. I remember when it was $7,000, and then it was bumped up to $8,000, and now bumped up to $10,000. So as FSD gets better and better, and as it gets rolled out and more people are on it, it's going to get better and better. It's it's a neural net. It's going to train itself. It's going to get better and better, and they're going to raise the price continuously on this. Just ask yourself, how much is a full self-driving vehicle worth? How much is that worth? It's probably worth more than the vehicle itself. So just tons of cash rolling in on the software side of this company. Everybody knows software margins are absolutely massive. That's why all these tech companies are just massive valuations, because a lot of it is software. So Tesla is also a software company, and they're just making tons of money on the software side of their business. All right, move on to the financial statements. To automotive revenues, you see this revenue 42% year-over-year growth, 7.6 billion in Q3 of 2020. Quarter-over-quarter, that's 47% growth. Year-over-year, 42% growth. Automotive revenues, of which regulatory credits. So actually, they got less regulatory credits than they did the previous quarter. 428 million in Q2 and 397 million in Q3. So negative 7%. So they're getting less regulatory credits. Yet, look at this, their automotive gross revenue has gone up from 25.4% to 27.7%. These margins are absolutely incredible for automotive company. 27, you can see this trend, 22.8, 22.5, 22.5, 25.4, now 27.7. I wouldn't be surprised if they get up to 30% by the end of this year, up to Q4 of 2020. I would not be surprised if they hit 30% gross margins. Total revenue, $8.7 billion in this quarter, 39% year-over-year growth. Net income, so this is their bottom line. They are now a profitable company, and just look at this growth. $331 million in net income. That's 131% year-over-year growth. Quarter-over-quarter, that's 218%. So you can just look at these numbers. They're growing massively, and they are not. They're just in the very beginning stages. All right, so Model 3, Model Y production. This is their moneymaker. These are their high margin vehicles. So Year-over-year growth, massive 60% year-over-year growth. There were 128,000 Model 3 and Model Y produced, and that's 69% quarter-over-quarter growth. So going from 79,800 to 128,044 in just 1 year, 60% growth there. How about total deliveries? 44% year-over-year growth, 139,593 total deliveries, the most deliveries ever in their history. And it was 97,186 the year before. So solar deployments also are growing, growing massively, 33% year-over-year growth, and storage deployed also growing 59% year-over-year. So they are still targeting their $500,000 vehicles for 2020. That was their original guidance. So they need 180,000 vehicles to be delivered in Q4 in order to make that happen. Look at that, 180,000. That would be the most ever. Their most ever so far was this quarter, 139,593. They're going to have to do 180,000 in order to meet that demand, and they claim that they are on target, or they are trying to meet that demand. It'll be absolutely a blowout quarter again if they are able to deliver 180,000 vehicles for this 2020 goal. I want you to take a look at this. So look at these blanks. Model Y in Shanghai in construction. Model 3 in development in Berlin. Model Y in construction in Berlin. Texas Model Y in construction. Cybertruck in development. Semi. All of this is coming down the line. All these blanks with no numbers in it, with no numbers, that is all money, 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 money. So that's why I say they're in the very beginning stages. This is going to be massive in the next 2 to 3 years. All these are going to be filled in with numbers, and that is all going to be a lot of net income coming down. All of this is going to be super profitable, very high margins. Model Y, Model 3, very, very high margin vehicles. Cybertruck with the price points of what was it, starting at $39,000. They're going to sell hundreds of thousands of these things, and they're going to be very, very high margin vehicles. Also, take a note. We recently added third production shift for our Model 3 factory in Shanghai. So they are aiming to crank these things out massively. So if you think these numbers are amazing, just wait for the next few quarters. They're going to be absolutely incredible. Moving on, some other points I want to talk about real quick. So battery, this is massive. All the other competitors are just now starting to make vehicles. And Tesla has already left the vehicle game. Tesla's not really interested in making vehicles, although that is their main thing. But they have moved on. They already got that on lockdown. They're focusing more on now manufacturing of batteries, full self-driving software, and just manufacturing of new ways to produce vehicles, manufacturing their own metals, manufacturing their own process of making vehicles, die casting vehicles, things that nobody has ever done, and they're going to be able to sell this manufacturing in the future. So that's what they already moved on from making vehicles. They're now making factories. They're now designing factories to make vehicles, and in the future, people are going to have to come to them in order to make vehicles. So they're just reimagining the way manufacturing goes with batteries, with vehicles, and high revenue things like software, high margin things. So range increase of their for their vehicles, 54% range increase. That's massive. Imagine if all of a sudden your vehicle right now, whatever it is, your gas guzzler or your electric vehicle right now, all of a sudden in the next iteration, the next year, your vehicle now gets 54% more range. That's massive. That's not like 10%, 5%, like year over year, every 5 years, cars come out and they get like 5% better gas mileage, 10% better gas mileage. And this is takes years and years to happen. Their next iteration of their vehicles with their next iteration battery is going to go 54% more range. I mean, that's just unheard of. Cost reduction, 56% cost reduction for producing their batteries. Just imagine that. 54% cut to their most expensive thing about a vehicle is the battery. So it's been widely known that if you could get production to about $100 per kilowatt, you're going to be on par with a electric vehicle, with a gasoline vehicle. That's when the price of the gasoline vehicle is going to be equal to the price of a EV vehicle when you get that battery down to roughly $100 per kilowatt hour. Now, we don't know exactly how much Tesla pays for, costs for them to produce their batteries right now, to get their batteries right now, but it is estimated to be about $114, $115. Now, if they could get it for down to 56% lower, that's well below that $100 price point. That's going to be undercutting gasoline vehicles by a massive factor. So it's going to be a point where it's going to be much cheaper to get an EV vehicle than to get a gasoline vehicle. It won't even be on par. It will be much cheaper, and that's the end game. That's the end, the end of the gasoline vehicle. No one's going to really buy a gasoline vehicle if you could get an electric vehicle for probably half or maybe a quarter of the price of a equivalent gasoline vehicle. Last thing is 69% reduction in gigawatts per hour capex for making new factories for batteries. So moving into the future, making these factories to produce batteries, it's going to cost 69% less. I mean, that's unbelievable. Just imagine if you were buying a factory today, and then in 1 to 2 years you could get that factory for 69% less. These numbers are absolutely amazing. Here is a die-cast machine in Shanghai factory for making Model Ys. These machines are absolutely massive. You can see these people, these humans on the side, they just look tiny compared to these massive machines. Very futuristic Model Y body shop. Plenty, all these robots. This looks like like a transformer factory or something. New paint shop here's Berlin. So Berlin is going to be up in the next probably 6 months. And here is Giga, Texas. Foundation is getting ready to be done. So, very exciting. Here is some battery deployment. So let's look at these metrics. So vehicle deliveries, see this steady rise up to roughly 140,000 vehicles in Q3 of 2020. Operating cash flow and free cash flow steadily going up. Q3 being the highest ever. Net income, again, here's 5 straight quarters of net profits. Q3 of 2020 being the highest of them all. So guys, that is my quick review of the earnings report, the numbers, and what I think about what's going to happen in the future. What I'm very excited about is this right here. This right here just tells you we are in the very beginning stages right here. If you're not invested in this company, it might be something to look into and consider about all this coming down the line. We are just in the infancy. Look at all this coming down the line. Shanghai Model Y, Berlin Model 3 and Model Y factory, Giga, Texas, with Model Y and Cybertruck coming out of here, semi-truck and Roadster. So guys, thank you guys for watching. Consider subscribing. Haven't already, give me a thumbs up. It really helps on the channel. Catch you in the next one. Have an awesome night. Peace.